So you've written several books over the last 30 years.
Yeah.
It has been 30 years. I've read quite a few of them. Why did you write this book? And why did you feel the need to write it now?
Right. I wrote it because I have a sense that although we all know about globalization, we don't understand that there's a financial system out there which actually is impacting on our daily lives and on really important aspects of our day, and in particular the cost of living crisis. And the thing about the system is that it's a kind of architecture. You know, it's as if we've built this great Roman kind of palace over the global economy, and it has its own rules and it has its own way of functioning. But it's almost invisible to us down here on the ground. And what drives me absolutely wild about economic discussions now, especially at a political level, is that it's so domestic focused. It's so focused what's happening here and ignoring, in a sense, what's happening out there. And yet what's happening out there, Vince, is what's affecting us down here. So, for example, food prices, energy prices, even house prices are all, and the other thing that really bothers me is your pensions. Those are all, the value of those and the price of those are determined in markets which include, for example, the Chicago Mercantile Exchange. How many people here have heard of the Chicago Mercantile Exchange? Wow, this is a well-informed audience. So, you know, that's where prices are fixed, and we don't discuss that. We don't know about that, it seems to me. So that's why I wrote the book, because I wanted to be something that everybody can understand. And economists talk about this all the time, of course, but they talk about it in terms that make it obscure and arcane and difficult to understand, and it's not actually rocket science, is what I want to say.
I couldn't agree more. So it's called the global casino. And so why the word casino? Isn't this just capitalism?
Right, I used the term, it's not my term, Keynes used the term casino, and a wonderful international political economist, Susan Strange, had written a book about the mad casino. So this is a term that has been used in the past, but it's about the degree of speculation that there is out there. And it's not capitalism in the sense that in the old days, if you think about the old-fashioned capitalists, the people who built the railways and so on, they have to invest in the tangible economy. They have to invest in the land, in a sort of broader sense of the word, and in labor, again in the broader sense of the word. And kind of both of those can prove difficult. You know, labor can go on strike, it can cost, etc., and the land can let you down. And capitalism now really disdains that kind of investment. You know, that kind of investment where you make profits by investing in the real economy is regarded as kind of, you know, silly thing to do, because actually you could make a lot more money just from speculation. And increasingly, the global economy now is a speculative economy, and it's a rent-seeking economy. So why on earth would I invest in green technology or green energy, or in, you know, retrofitting housing or building flood defenses, when all I have to do is gamble on the value of an asset, whether that's a London property or whether it's a forest or whether it's gold or silver, and, you know, and invest in that and then collect the rent that's generated by that asset. So we now have an asset-based economy which collects rent, essentially, for everybody. And what that means is you're sort of, the investor is passive, you know. The property in London, which you can purchase as an asset, and which is probably a Victorian building, and which you probably won't do anything to. You won't improve it. You may improve it a bit, but you can't add an extra story or anything. But what you can do is just, in effect, sit on your butt and collect the rent from that and collect the capital gains from that as the value of the property rises. So there's a preference in capitalism now for that kind of rent-seeking activity. It makes it, and I get impatient with all my Marxist friends who go on about the declining rate of profit. Making profits is not something that capitalists want to do anymore.
Right. And you often talk about the shadow banking sector, and I think that's closely related to the book in Global Capitalism and Casino Capitalism. What's the link between the Global Casino book and shadow banking?
So the whole point about the Global Casino is that it's like a casino, where actually it's about gambling, it's about, there aren't any rules. It's about how, for example, in casinos, they sell a lot of alcohol to lower people's inhibitions so they'll risk more. And the financial system is becoming something where if you are engaged in trading, and you know about this, Vince, you're a trader in the global markets, it's incredibly addictive because, you're trading across markets, you're trading across boundaries, borders, and you're trading across different currencies. And it can be incredibly gripping and exciting and addictive. So there's quite a lot about the casino, which is like a Hollywood casino. It's also not rules-based. On the whole, it's largely unregulated. And the shadow banking system is a system within the international financial system where, in effect, organizations like asset management funds are creating new money and lending money and earning the rent on that money, which is the rate of interest or the yield. And they're doing that without any supervision from either the Federal Reserve or the Bank of England or any of the public institutions that we have created to manage and to regulate those activities. They do it without that. And several of the financial crises that we've already endured this century have occurred within the shadow banking system. And the problem with the shadow banking system, and it's a bit like a casino in that if people become addicted to gambling, that the casino might benefit from that, but it has social impacts. It has personal and social impacts. Addicted gamblers are a problem for the family and for society more widely. But equally, when the shadow banking implodes, which is what's happened around the time of the COVID, it happened at the time of the great financial crisis, and it happened before that, then we suddenly discover the shadow banking system is tethered to the real economy, to the Federal Reserve or to the Bank of England, and they expect to be bailed out by the public institutions that are backed by you and I paying our taxes and empowering those institutions that way. So it's a kind of weird thing where they are actually out there in the shadows beyond the regulatory democracy, but at the same time, they're tethered to our public institutions, and we bail them out. And this brings me to another aspect of this new form of capitalism, which is that they don't believe in making losses. And in this sense, today's capitalism, that kind of financialized capitalism, it's quite a lot like the Soviet economy. There was no company in the Soviet Union that could go bust. They weren't allowed to go bust. It just didn't happen. The state bailed them out at all stages. And under capitalism, you're supposed to take risks. And if you're successful in your risk-taking, you're allowed to benefit from the profits of that. But if you make losses, then you're supposed to be disciplined and make losses, and the discipline is bankruptcy. But now we have a form of capitalism where they want to make the capital gains out of speculation, but they ain't going to take the losses. And somehow, that's the problem with the shadow banking sector.
Well, that's something that's near and dear to my heart. 4 out of the 5 banks I worked at in the city were bailed out during the financial crisis. So yeah, I'm well aware of how that works. So a bit about me. So I was a bond trader in the city for 20 years, and one of the things that I think we hear a lot, particularly from the likes of Rachel Reeves and from lots of mainstream politicians, is that there are these bond market constraints and that we can't, for example, have a Green New Deal, we can't spend money on our public services. We have all of these kinds of constraints because the bond markets are going to discipline us. What are your thoughts on that? I have mine, I'll give you mine afterwards, but what are yours?
My thoughts is that, because I know you, Vincent, is that actually that's hugely exaggerated, and that our politicians engage in what I call pretend powerlessness. We have nationalised the Bank of England. We nationalised the Bank of England in 1945 because the governor of the Bank of England messed up majorly in the 1930s, right? And actually was also corrupt. The stories around that are just awful. But anyway, as a result, in 1945, the Labour government said, no, we're going to nationalise our bank. This is a public institution. Its power derives from the fact that there are 30 million British taxpayers who, by law, have to pay taxes every year, right? And no company has that kind of assured level of income. So this massively empowers the central bank. And what we've done is to sort of politicians have distanced themselves from the central bank and handed the power over the central bank, which is the foundational power of the state, to technocrats, to governors, and to experts inside. And they don't use the political power that we could use from the Bank of England in that way. So that's one of my feelings. But having said that also, I have to say that the bond market has disciplined Donald Trump. So it does have so although I don't believe it has the power that we give to it, we must notice that he climbed down on his tariffs because 7 days after, immediately after he denounced them, there was a problem with hedge funds in the bond market.
Yeah, I think it was less bond markets and more equity markets and other capital markets. But I think one thing that's often missing is that if the states or the central bank decides that they're not going to intervene, then bond yields will move around a lot, and we can have all kinds of chaos, like we've seen with Liz Truss, which we can move on to at one point, and another, other times. But what I think is often missing is that people don't understand that when the central bank does decide to intervene, that bond markets tend to calm down very quickly. And just before moving on to the next point, I don't know, is everybody here or anybody here familiar with the widowmaker trade in Japan? No? So Japan, they had their financial crisis in the late 1980s, early 1990s, and that was mainly corporate-led as opposed to any subprime or any other area of the economy. But they had a very early experimentation. They were, in fact, the first ones to implement quantitative easing. And this is where the government and the central bank basically decide on where interest rates are going to be. So the Japanese government decided that given the extreme level of indebtedness, that their interest rate was going to be zero or near zero. And it wasn't long after I joined the city. I joined the city and moved into the city in 1997. And this was around the time that they first began their quantitative easing experiment. And there would be occasionally, every 6 to 12 months, there would be headlines in the Financial Times that the Japanese government was going to run out of money, or that the central bank was going to lose control of interest rates. And so you'd see some heavy betting against Japanese government bonds. Hedge funds would bet against Japanese government bonds. And the central bank would just keep buying bonds, and interest rates stayed at zero. So periodically you would have hedge funds lose billions. And that was known as the widowmaker trade. So the hedge fund managers would be fired, and the hedge funds would have suffered, significant losses for that year. And then when Japanese debt to GDP would hit, 150%, people would say the same thing. They're going to lose control. rates stayed at zero. Another, load of hedge funds would lose billions, and so it went on. But that was really my education, where I understood.
And the power of the Japanese central bank.
And the power of the Japanese central
to
bank.
keep interest rates at zero,
Yeah.
which, in fact, I visited Japan at that time, and everyone talked about how, it had broken down because it had this out-of-control system. But actually, they were doing really rather well. They had full employment. They really weren't doing that badly, because the central bank was managing the rate of interest, the price of money, and the availability of credit in the interests of the Japanese economy, right? Whereas the British economy, the British central bank manages interest rates and the availability of credit in the interest of the private sector.
Absolutely.
And in particular in the interest of capital markets. And that the difference, therefore, is, does our bank and do our politicians use the foundational power of the state to serve the interests of the people? And I'm arguing they don't, no. And this brings us back to fiscal policy and the story that there is no money.
Absolutely. I don't think we can have a conversation about international financial markets or bond markets without talking about Liz Truss.
Absolutely, yeah.
So Liz Truss, she argued that she was effectively ousted by actors in the deep state or within the British institutional establishment.
Yeah.
Her politics notwithstanding, do you think there's any validity to that?
No, I don't, and I do want you to explain that to the audience, Vince, because what the impression given was that she was reckless, and the fact is that they were going to give tax breaks to the rich, and nobody. And they really didn't have a mandate for that, but they were going to do stupid, reckless things. They did more reckless. They sacked the head of the Treasury, who's a really good guy and very accommodating. Thomas Scollery, his name was. And he'd worked for a range of governments. He was a really good civil servant. They sacked him overnight. And they refused to talk to the Bank of England, and they were just going to cut taxes for the rich, and that was it. And naturally, the bank didn't know what they were planning to do. They didn't know what was going on. And...
well, given that there was no coordination between Liz Truss and the government and the Bank of England, the bank was actually engaging in something called quantitative tightening at the time, which is where they're selling government bonds. So not only were they not supporting controversial government policy, they were actually working in the exact opposite direction, where they were selling government bonds. And this lack of coordination led to the chaos, and everybody knows that, it went on for a number of days. But for me, the lesson that I learned, and hopefully after the end of this, it will resonate with you guys, is that it again demonstrates the power of the central bank. Because most people's understanding of the Liz Truss affair kind of starts and ends with the chaos and the effective end of her premiership at the end of it. But if you actually follow the episode to its conclusion, what actually happened was we had this extreme turmoil in the bond market. The Bank of England was selling bonds, not supporting the bond market. Soon afterwards, after about 2 or 3 weeks, the pension funds got into trouble.
And interest rates were rising.
Interest rates were rising generally anyway.
Yeah.
But you then had problems in our pension sector where they had certain financial products that gotten into trouble because the move in the bond market was so violent that the solvency of the pension fund industry was in danger. So at that point, the Bank of England steps in and they say, we're going to go, or we will offer to buy, I think it was 60 billion in long-dated bonds. So not only are we going to stop selling bonds, we're actually going to buy bonds. And the market stabilized. And this is the bit that people, I don't think, fully understand, is that the chaos only continued as long as the Bank of England allowed it to continue. As soon as the Bank of England decided that there was enough chaos and that there was now some fundamental problems within the pension fund sector, they made their pronouncement. It could have been 80 billion, it could have been 120 billion, it could have been any amount. Yeah. And that was that. And actually, if a final point here is that a lot of people didn't realize that the Bank of England actually made £3.5 billion during that episode, because, and it's all publicly available. You can go to the website, and it's they remitted £3.5 billion back to the state, because they were buying bonds when everybody was selling bonds, and the bond prices soon moved up, and they then sold the bonds at a profit. So I actually said to an MP that I met, I said, maybe we should do this more often. It literally is that easy. You engineer a crisis and then you step in. You've got unlimited balance sheet. I will bet with the Bank of England. I still trade, and I would bet with the Bank of England every time. It makes no sense to do anything other than that.
Yeah. Can I say that, so therefore Liz Truss is paranoid, but she's got a point.
Absolutely.
Right? But the point is that she hasn't understood the need to work with the public institutions. And I have to say that I think Donald Trump has a point as well. I think interest rates have been high in real terms when the economy is really, really weak, not just here, but in the United States. It's not fully recovered yet from either the great financial crisis or COVID. And so therefore, he's got a point. And again, interest rates, unlike Japan, are really not being set in the United States to suit the interests of Americans. They're being set to suit the interests of Wall Street. And this is where dear old Donald gets hopelessly conflicted, because on the one hand, he wants low interest rates so he can borrow crazy money when he's not looting it. But on the other hand, he won't do anything to rattle Wall Street. He's just appointed Kevin Walsh as governor of the Federal Reserve, and that is because Kevin Walsh was what Wall Street wanted, not what he wanted. So anyway, so both Donald Trump and Liz Truss have got a point, but they have the wrong point.
Absolutely. And Donald Trump is right in saying that, the U.S. shouldn't have the highest interest rates in the G7. There's no need, excluding the UK, there's no need for them to have that. That is a policy choice, and that choice is largely driven by the desire to please Wall Street. It's basically, interest rates or interest on government bonds is free money for rich people. I mean, that's really what it is.
And again, this brings me back to what's happened to the capitalist economy. It's a creditor's economy. It's not a debtor's economy.
Right.
I mean, there are far more debtors, you and I, than there are creditors. But the economy is skewed towards the interests of creditors, essentially. So, Vince, I think we better give the audience a chance to ask some questions.
Yeah, actually, one question before we move to questions. Okay. So, what do you think? Let's end on a hopeful note in terms of our Q&A here. What do you think we could do, or should we be doing, to make things better?
Well, first of all, that we have the crisis that we have because we agreed back in the 1970s that money should be allowed to cross borders. Capital should be able to cross borders without any friction. Now, this is going to be quite a long answer, Vince, but money is credit, and credit is a promise to pay, and that promise to pay has to be regulated. Because when I promise to pay, when I flash my credit card at John Lewis because I'm buying a washing machine, John Lewis needs to know that I'll pay that, right? And I could be arrested if I take the washing machine and I don't pay, right? So we have that system. If we allow that money and that credit to escape across borders, what it does is it escapes regulation. And money cannot exist in a non-regulated world. Precisely because money is not dollars, money is not gold or silver or Bitcoin. Money is a social construct, and that's why it has to be managed. And the whole point about financialization and globalization is about, no, don't let's manage money, don't let's regulate it, let's leave it to the markets, And and from my perspective, that's the problem. That's why you get fraud, that's why you get corruption, that's why you get money laundering, that's why gangsters love it, drug dealers love it, Bitcoiners love it because it escapes the law. It escapes regulation. And then, as a result, it caused catastrophic crises. And the public, the taxpayers, have to sort it all out eventually, you know. So for me, so capital controls, should I say, is the one thing. The other thing is we have to take back the power of central banks. We can't allow technocrats and Wall Street and the City of London to make decisions about the most powerful instrument available to the state. When you say there is no money, when you hear someone say there is no money, they are lying, right? They are lying, and they lie, and the public know that because they argued that before the great financial crisis, and then suddenly there was a lot of money. They argued that before COVID, and suddenly there was a load of money. And you know, I mean, by the way, the billionaires made a fortune out of COVID, right? Elon Musk made, I don't know, increased his wealth by something like 123%. So it's not a case of the shortage of money. It's a case of, is the money being used productively? Is it being used to serve the interests of society? Or is it being used to gamble on and to make losses and to cause crises? And you know, so for me, I'm clear about that. So it's about managing flow. Oh, by the way, with capital mobility, you cannot make the rich pay taxes. You know, all the stuff about the way to solve the world's problems and to fix out our fiscal problems is to tax wealth. Well, wealth ain't going to be taxed with capital mobility. In a world of capital mobility, it's just going to cross the border. It's going to go to Ireland. It's going to go to, you know, any other kind of tax haven. So, you know, when my friends say, oh, the answer to the problems is taxing the rich, it's kind of delusional because they're not there to be taxed. They've moved their money away a long time ago. Anyway, I'm rambling here.
Yeah.
Jump in questions?
Yeah,
Yes, we're going to go to
questions?
some audience questions. Yeah, wonderful. We've got one just over here.